and welcome to the Money Show, your one-stop destination for all your personal finance queries. I'm Kavita Thapliyal, and today we have lined up a power pack show for you where we'll be talking about various aspects of your investment and your investment portfolio. And we will also throw up on the counter to get your mutual fund portfolio queries answered. Just in case you want to send across your questions live, you can do that on our WhatsApp number, which is 8657974571. The email ID is themoneyshow@etnow.tv. So any financial goal for which you need a strategy from our experts to send across your questions. And okay, so let's begin the show. And today, this is a show where we usually decode the latest in finance and investments for you to make you the smart investor. But today we are diving into one of the hottest new entrants in the Indian investment landscape. And we're talking about SIFs, or special investment funds. Until recently, the PMS, which is Portfolio Management Services, and AIF, which is also called Alternative Investment Funds space, had its own rhythm, bespoke and high ticket and under the radar for many, but things look like they are changing now. So with mutual funds houses like HDFC, ICICI, Nippon, Axis, Edelweiss, Quant entering the SIF space, a new hybrid investment model is emerging, one that could potentially reshape how affluent investors approach wealth creation. So what exactly are SIFs? How do they differ from traditional PMS or mutual funds? And most importantly, should you be the one considering them for your portfolio? Now, to help us decode all of this, we are joined by someone who's been tracking this space very closely. R. Pallavarajan, the founder of PMS Bazaar, a platform that helps investors navigate PMS and AIF offerings with transparency and insights. Good evening and welcome to the show. And let me just begin with the basic, because it's very important for our viewers to understand what exactly is SIF. So, how can we understand the difference between PMS or AIF? When to compare to SIF, it really stands out in terms of structures, in terms of regulatory innovation. Does it truly offer something new to the investor?
Certainly, yes. First of all, thanks for having me on the show. A few days back, there have been only three products available, professionally managed product available in our country. Under SEBI, one is mutual funds, which is very popular. And for HRA investors, we have two products, which is PMS and AIF. Now, in addition to this, we have new product, which is SIF, Specialized Investment Fund, which has been recently been launched by SEBI. So how it is different from other products? So idea behind this introducing SIF has been clearly mentioned by SEBI to fill the gap between the mutual fund and the PMS space. And if you take the PMS space, the minimum investment threshold is 50 lakhs, and whereas for AIF it is about 1 crore. So broadly, if looking at alternate investment space, the number of investors at PMS is about 1.9 lakh. And if you take AIF, it should be broadly about not even 1 lakh. So put together, it should be broadly 2.5 to 3 lakh clients who have invested. And if you sync this data along with this HNI data in the country, when I mean HNI, that the investors who have, the individuals who have net worth of 1 million USD and above, it is hardly 1 million investors who have the potential. So out of this 1 million, 30%, 25 to 30% of them have participated into PMS and AIF space. But there is an emergence, we have seen that the per capita has been increased in the last 10 years from 1,500 USD to 2,500. So there is a new set of affluent client who cannot able to afford this 50 lakhs, but still, they have a potential to put 20, 30, 40, 50 kind of money. So I think to fill this gap, this has been introduced. The key difference, first of all, let's keep this in mind that SIF is not been regulated separately. The regulation will fall under the same mutual funds. It is a kind of an upgraded mutual fund. Generally, the perception is that it is an alternative to PMS, but actually it is an upgraded version of mutual funds. So that is one thing has to be kept in mind. The key different in this product SIF is that the 25% can go unhedged in the derivative. So ideally, the derivatives portion can be taken at the SIF and 25% can be taken unhedged. So that's a key difference while comparing with the mutual fund. But in addition to this, there are a couple of other differentiation as well. Like it could be the subscription or a redemption. The subscription can be on a daily basis, where the redemption can be in a different intervals. It depends on the products. It could be starting from 1 day to weekly or fortnightly, monthly, and even some of the products can also come on the yearly redemption side. So these are all, some of the key differentiation. And as I mentioned, that SIF is an upgraded version of mutual funds.
Talking about an SIF, what typically an exposure will look like? You just explained something that's an upgrade model, version of a mutual fund. In a mutual fund, if it's equity fund, they invest in different stocks and depending on the theme of the fund. If you could just explain by example, how would a typical SIF look like?
Certainly. See, broadly, SEBI has given three categories, which is again similar to mutual funds. One is equity, second is debt, and third is hybrid. So there are three category, and within this three category, there are subcategory which is close to seven subcategories. Broadly, all the categories will have an option to have an allocation of derivatives up to 25% unhedged, as mentioned. So this will be kind of a long short product. You will be able to see that which will come in. So if you take equity, there will be equity long only. Let's say that a fund manager has an 100 crore allocation, whereas he can take a position up to 75 crore in long position, and whereas this 25% can be taken as a put option. So in that case, the position has been adjusted or is trying to mitigate the risk by taking an allocation 25% allocation to the derivatives, so which is not possible at a regular mutual fund. So the 100% will be allocated into the long only equity. Whereas here, you can limit up to 80%, and maximum 25% can go to, in the derivative side. So that's a key difference.
Okay. But when we talk about the investment figure, see, in a mutual fund, you can do an SIP. Is that possible in SIF? What is your first investment amount, or what is the minimum threshold which has been approved as per the guidelines, as compared to a PMS and AIF? How reasonable it is for a retail investor to invest in SIF?
Well, the minimum threshold of the SIF is 10 lakhs. So 1 million is the minimum investment for SIF. But however, any fundos may have, multiple schemes under this SIF. Let's say that ABC, AMC, SIF has, four different schemes. And this 10 lakh threshold is applicable to one AMC at one PAN level. So in that case, they can multiply their investment into four different products, let's say 2.5 in each product. So that is the advantage what they have. Now, in terms of SIP and SWP, yes, absolutely it is available. It is clearly mentioned. However, the minimum investment has to be maintained at 10 lakh, and any SIP or SWP has to be within that minimum investment threshold.
Okay, so one question, with regards to SEBI's tightening grip on AIFs. Now, the way we have seen this particular thing rising, do you think SIF is also a way for fund houses to navigate around regulatory hurdles and show more interest in SIF?
Certainly, yes. If you ask me the potential, according to our study, it says that the industry potential currently looks like somewhere between 3 trillion to 4 trillion. And the product also allows a fund manager or a fund house to innovate a lot of product based on the derivatives. And also it doesn't allow an investor to redeem quickly as they have in mutual fund, right? Kind of a daily in and daily out, where the fund manager has a flexibility where he can define the intervals also. It could be 10 days, 15 days, or 30 days as mentioned earlier. So in that case, it becomes very innovative product and also viable product for any AMC. And we already seeing a lot of traction, which has already started from the AMC side, which have applied for a license at SEBI. Now, SEBI also clearly defined, keeping, there should be a clear differentiation between the mutual fund and SIF, even though it has been regulated under mutual fund, to have a clear differentiation between the mutual funds. So SEBI has mandated that there should be a separate brand has to be created for the mutual fund house. Say recently, Edelweiss have created a brand called Altiva, which got approved. I think that's the first fund which got approved. First SIF got approved. Thereon, you will see that new brand which will be emerged. This will be called, like say Altiva has been powered by or brought to you by Edelweiss. And similarly, you will see that multiple new brands will come in, which will be powered by or empowered by or, by brought to you by kind of the AMC. So that, and also the separate website has to be maintained. So a lot of distinction has been given by framework has been given by SEBI, and I think mutual fund houses are already working aggressively on SIF side.
Okay. I also want to understand tax implication as compared to a PMS and an AIF.
AIF and SIF.
Want to understand
Okay.
tax implication, yeah, as compared to a PMS and AIF, and also compared to a normal mutual fund.
Yeah, fine. See, this SIF taxation exactly remain as mutual fund. So there is no differentiation on the taxation side. It will be on the at the client level. There is no taxation at the fund level. Whereas PMS taxation is simple, which is direct. I mean, which is similar to the direct equity. It is since it is an isolated portfolio level. Whatever transaction has been done from the fund manager, whether it could be long term or a short term, and he has to pay the investor has to pay the tax as per the transaction done by the fund manager. And whereas AIF, it again depends on the product. There are different category one and two and three. I'll limit only to category three because which is similar to kind of SAF, because only in category three we have long short funds. At long short fund, at category three, the taxation is at the fund level. Since it is falling under the business transaction, the taxation is at the higher slab. And for a long short fund, which is similar to SIF, probably you'll see a lot of long short fund which will fall into SIF. Here the taxation is about 40%, 39, 40%, which is the highest tax slab, which has been taxed at the fund level. And whereas in SIF, the taxation will be similar to mutual funds. So on the long term and as well as on the short term. Depends on the holding period.
Let's also talk about transparency and control over the portfolio. Now, can investors expect greater transparency or control over their portfolios through SIFs?
Absolutely, yes. There is again, SEBI has been well defined, but transparency may not be as equal to mutual funds. But still, it has been clearly defined. Now, first of all, I mean, client has to refer the strategy information document, which is, kind of an offer document where the fund has to clearly define, what is the interval of the fund, whether it's a daily or it's a weekly in terms of subscription, or it could be a redemption, and then how much allocation they're going to give it to the derivatives, and to what extent, and what are the product is about, whether it's an equity or a debt or hybrid, and everything has to be maintained. This is on even before raising the fund. Now, after raising the fund, and there is again a mandate to disclose the portfolio on a bi-monthly, whereas in mutual fund it is a month-end basis, and whereas for SIF currently it is bi-monthly basis, and also like every 10th working day of the bi-monthly, they have to mention the portfolio. So I think client has to know like what's happening in the portfolio. Ideally, the portfolio will give the overlook, and also before investing. So all this has been well defined, and yes, transparency level will be much higher.
Do you think SIFs could eventually replace PMS for a certain class of investor, especially those looking for more flexibility with some structure?
No, see, PMS. Let's understand the difference. PMS is an isolated. The client who's investing into PMS will have a different. Will have a separate demat account. Will be managed by the fund manager, and which has been equal to direct equity. Ideally, it has to be compared with the direct equity. And mostly the PMS investment. Generally investors look for a long only. And whereas the SIF, you will see that a lot of long short strategies will fall in. Maybe to an extent, we can compare the long short strategy of AIF, which will be similar to SIF. But the difference between AIF is that the fund manager can, even though the taxation is about 39-40%, but still, the leverage is up to 200%. Let's say that the fund has 100 crore, they can take position up to 200 crore, which may not be the case at mutual fund.
All right, one last question to you. What trends are you observing at the PMS Bazaar? Because investors, do you see them inquiring about SIFs or still sticking to tried and tested PMS strategies? What's the trend like?
Certainly, there is a lot of excitement from the investors, asking for when the SIF will come, like which are all the AMC has been applied, and a lot of traction what we are seeing. And always, there will be excitement. Let's see that, SEBI has introduced AF in 2012, and the AF has grown significantly over the period. I mean, in the last 13, 14 years, we have seen the staggering growth. And after 12, 13 years, we are seeing a new product which has come in SIF, and that to minimum ticket size of 10 lakhs. And I think there is a definite excitement. And because of the innovation, a lot of innovation can be brought in specifically on the derivative side. Customers are awaiting, investors are awaiting for AMC to get launched this product. And you will see a lot of traction which will happen once the product get launched by the AMCs.
All right, I think that's all the time I have on the show today. Thank you so much for being on the show and helping our viewers with everything about SIFs today. Thank you.
Thank you.
All right, time for a quick break, but then post that, let's connect with our other guest on the panel today, Mr. Hemant Ustagi, and get your life financial planning done. Just in case you want to send across any questions, you can do that on our WhatsApp number. We'll be flashing the number on the screen, and also our email ID where you can send across your queries, 8657974571, our WhatsApp number, and the money show at etnow.tv, our email ID. See you after this break.